Hey, welcome to this lesson on hammer pattern. So basically, what is a hammer pattern? A hammer pattern looks like this, okay? So you have a small body on top with no wick, and if there's a wick, it shouldn't be more than 10% of the whole entire candle. So a small upper wick is still okay. So you have a small upper body, doesn't matter what color it is, and then you have a long wick that is preferably at least 2 times the length of the body. So you have a small upper body, long lower wick with little to no upper wick, and this is an effective reversal signal if found at the end of a downtrend. So if you see this pattern at the end of a downtrend, this is a reversal signal. But if you see it in the middle of an uptrend, it can be a continuation signal, and price would continue to go up. Okay, so you can see this in an uptrend during a retracement, because as you know, in an uptrend there are retracements. Okay, and when the hammer forms over here, it's an indication that the price is going to continue to go up, and it's going to retrace again, and it's going to go up. Okay, so the color doesn't really matter. More importantly is what context is it formed, and this is stronger than the hanging man pattern, which is the one you find at the end of an uptrend. Okay, and of course, just like any other candlestick pattern, it can be used in any time frame. So the psychology behind hammer pattern is that initially the price opened here, and sellers push the price all the way down at the beginning of the session. But then after that, buyers start to come in and then push the price up all the way until here, and the price will close here. Whereas for bullish candle, the price would close here instead, and price will open here instead. Okay, basically it's the same thing. At the end of the session, buyers won the game. So if I'm asked you right now which one is stronger, this pattern or this pattern, you need to understand that the longer the lower wick, then the more in control the buyers are, the stronger the buying pressure is. So you see hammer pattern really common in the hourly charts as well as the daily charts. If I'm to provide you 2 candlesticks with the same length, okay, same body size and same lower wick length, but then one is green color, one is red color. Yes, just now I mentioned color doesn't matter, right? But ideally, the stronger pattern between the red and the green, which one has a stronger buying pattern, which one has a stronger buying pressure, it will be the green candle. So a green hammer would be stronger than a red hammer, but that doesn't mean that if you see a red hammer at the end of the downtrend, then you ignore it, okay, because it's still a bullish signal. So let me give you some examples. Can you spot where the hammer pattern is? So the hammer pattern is very useful if you're somebody who likes to pick tops and bottoms, and it's especially useful if you find it at the end of a downtrend. If you find it in the middle of the trend, it wouldn't be that strong. For example, see a couple of patterns here, it wouldn't work out the way you want it to be, and also there's no indication that there's a downtrend over here. But right here you see a massive sell-off, and when you see a massive sell-off, very often times it is the end of the downtrend. Okay, so you can see that at the end of this trend, there's a little support zone over here. Okay, and there are a couple of hammer patterns, of course some with upper wicks, but you can see very long lower wicks. There are so many times where sellers try to come in. You see there are so many candles over here with lower wicks as well. There are so many times where sellers start to come in, but buyers succeeded in pushing the price up. So if you see consecutive candles with long lower wicks, just like the hammer, then it is an indication that buying pressure is starting to come in. So then if you're somebody who likes to pick tops and bottoms, what you need is a confirmation. Okay, what kind of confirmation do you need for a hammer pattern? You need a bullish candlestick pattern like this to be formed right after the hammer pattern is formed. Okay, so what you can do is that once this candle closes above the high of the pattern, you can make a buy trade. Okay, and then you can put your stop slightly below the hammer, and then you can take your profit depending on your risk appetite. But most people, if they are short-term traders, they can put their TP target at the recent swing high, okay, which is over here. Alright, and you get a good risk to reward ratio. And the thing about hammer patterns is that it would give you a very good risk to reward ratio, okay, if you enter it the right way. But if you're somebody who is not comfortable with picking tops and bottoms, then you use this as a take profit signal, okay. Of course, make sure that you add all your indicators that I teach you. I'm just putting in one line just to make my explanation simple. I don't want to confuse you with way too many indicators. That's reserved for later. Okay, so can you use hammer pattern in an uptrend? Yes, you can, because in an uptrend there are small retracements like this, market corrections, okay, where the price comes down and tests a level. So in this case, the price comes down and tested your 100 moving average over here, and you can see a couple of hammer patterns over here, couple of long lower wicks where buyers push the price up, even for this one, which are not super ideal hammer patterns. But you can see a couple of consecutive candles with lower wicks, so this is an indication that okay, buyers are starting to come in, so be prepared to go in. So you want the price to close above your hammer pattern, and you can see a first hammer pattern. The next candle that forms is a little bit like a dragonfly doji, so you cancel that out. Then the next hammer pattern that forms is cancelled out by this bearish candle, and then the next candle that forms, this one is not super ideal of a hammer pattern, but the next candle that forms after that is a bullish candlestick pattern. So you can put a buy order over here and then put your stop slightly below the 100 SMA, okay, and you can take profit at the most recent swing high. So in this case, your hammer pattern becomes a continuation pattern in the big picture, but in the short term it becomes a reversal pattern. So it depends on the context that you see it, whether you want to see it zoom in or you want to see the big picture. Because you can say that the hammer pattern caused a reversal over here like that, U-turn, but in the big picture it is still helping the bullish trend go on, right? So you can say that your hammer pattern can be used to spot any reversals in an uptrend as well. You can see a hammer pattern over here testing the 100 SMA. You can see a not so ideal hammer pattern over here, also testing 100 SMA. The next candle that forms is a bullish candlestick pattern. So once this is completed, you can make a buy order over here, okay, and you can take profit in a recent swing high, stop slightly below your 100 SMA, okay. Then you get a good risk to reward ratio, and moreover, confirm it with your momentum indicator. You can see stochastics going to oversold and then going back to the neutral level, okay. And moreover, you see a little bit of support over here, which gives this a confluence. Okay, so I added more indicators so that you get a glimpse on how to use it all together. So you can see the hammer pattern over here, and subsequently also a couple more, okay, candles with long lower wicks again and again and again. And also at this point in time, you see a massive sell-off, consecutive bearish candles, and not only that, stochastics went to oversold, right? So you want to wait for a confirmation. This hammer pattern that's formed, the next candle that's formed is a bearish candlestick. It doesn't close above the hammer, so it cancels out. Then this hammer pattern, next candle is formed, again doji, so you wait. Next candle that forms long lower wick, although this is not super ideal for a hammer pattern, but then the next candle that forms a bullish candlestick, and then it closes above right here. Okay, so you realize that sometimes hammer pattern, it doesn't cause a reversal immediately. It might form first, and then it's going to range a bit before it ends the downtrend. So it's very important for you not to rush into the trade. Don't just see a hammer pattern and then you go in straight away, because you gotta wait for confirmation for the candlestick to close above the hammer. So by now you should know that the best hammers would be formed at the confluence area, okay? But even if it doesn't, even if it has a support, it is still okay. So you can see a hammer over here, okay? Next candle is a spinning top, so you wait. Subsequent candle is a doji, then you just wait, and then the fourth candle goes above the hammer pattern. So what you can do is, if you're a beginner, if you're not experienced, you start to take some profits, okay? If you're somebody who pick tops and bottoms, you see this candle closing above hammer, then you can put a buy order over here, and you can put a stop slightly below the hammer pattern. And also another confirmation is that your stochastics went to oversold, right? And most importantly, your stochastics is showing you not only oversold but a little bit of bullish divergence, okay? Price is making lower highs, but then stochastics is giving you a bullish divergence signal. Because some people might ask, okay, there's a hammer pattern over here even though it's not super ideal, and then the price also closed above the hammer pattern here, but then can I go in over here? Yes, stochastics went to oversold, but then if you are looking for bullish divergence, you don't see any of it, right? So if you entered here, you probably will put your stop loss over here and then you get stopped out. So you're gonna add the bullish divergence if you're picking tops and bottoms in a downtrend. And of course the end of the trend is confirmed when 50 cross above 100, and then your 100 start to slope up, and then your 50 also start to slope up. Okay, this example I'm using RSI, and can you spot where the hammer pattern is? So you can see one over here, and you can see one over here. Now the thing about hammer pattern is that, as well as other reversal patterns, it doesn't tell you how long the price would reverse. It might reverse into a temporary correction just like this, or it might reverse in such a way that it ends the whole entire downtrend. So it wouldn't tell you whether it will be a market correction or will it be a reversal of the trend, okay? Just take note of that. But of course there are some clues that you can take from your momentum indicator, from breakouts, to tell you whether this is the end of the trend or not. You can see a hammer pattern over here, and you can see one over here. The first one caused a temporary market correction, and the second one caused a complete end of the trend. So what are some of the clues that tell you the trend is ending? Of course we cannot predict the market, but there are some clues that we can take from that, okay? So you can see the first hammer pattern, the second confirmation candle, yes, it closed above hammer pattern, and RSI also went from oversold back to neutral level, and also it is creating a bullish divergence. So does this mean that the trend is going to end? So you gotta look at the context. Is there a massive sell-off before this hammer pattern? Okay, if you look at it in big picture, that's not really a massive sell-off. The price kind of ranges a little bit and then comes down a little bit from here. Whereas compared to this, you see an almost 90-degree free fall. And also you see a long lower wick over here, subsequent candle, bullish candle, then the third candle, it closed above the previous candlestick patterns. And somehow it tested this green support. Again, you see the same thing. The second hammer patterns, they're actually a couple, one over here and one over here, not super ideal. But you see a long lower wick, as well as this one, long lower wick as well. Of course, I prefer the body to be a bit smaller, but then at this point in time, you can also see that RSI went to oversold, and also there's a bullish divergence. And how do you confirm the whole entire trend is ending? So if you draw a major trend line, okay, and the price breaks above this major trend line, then this is an indication that the trend has ended. This is not a temporary market correction, this is the complete end of the trend. Okay, another example for you. You can see right at the bottom over here, alright, there's a hammer pattern, not only one here, but also a couple more. See, 3 more over here, right? And the price went to oversold, and subsequently price closed above all these hammer patterns, and the price went on an uptrend. Okay, one more example, a downtrend over here, massive sell-off, and then a couple of hammer patterns form, okay, with lower wicks. Price goes above these hammer patterns and then comes back down again, which is normal because it doesn't reverse immediately. Sometimes it's going to retrace, and then another hammer pattern form, then a confirmation where it closed above hammer pattern, and then RSI also went to oversold, and you see a bullish divergence that is forming. By now you should be able to get the gist of how to use a hammer pattern and how to spot the fall signals. Okay, so with that, I'll talk to you in the next lesson. Bye.